What's up traders, welcome to Failure to Displace. This video we're going to take a look at this monstrous 5R trade that set itself up in macro number 1 on EURUSD in the London session. Let's jump through the trading plan now, see how this played out and get into the analysis. Just before we jump into the actual analysis, I have left a link to this trading plan in the description down below, so you guys can go ahead and save a copy of this if you are going to try and utilize this strategy. The cheat sheet is probably the most useful piece of this to be able to spot SMT divergence. A quick run through of the checklist, what we're looking for in the trading window. We're going to identify some higher time frame points of interest. These will be primarily 15 minutes or 1 hour points of interest. We're going to be looking for a 1 minute sweep of liquidity within our macro times, and this sweep should create SMT with the Dixie. Then we're going to be looking for an opposing fair value gap to fail, creating a potential inversion fair value gap. We need an engulfing candle to close over that opposing fair value gap, and this will confirm indeed that we do have an inversion fair value gap. Our entry will be on the engulfing candle close, so we will enter at market as the engulfing candle closes. Our stop loss is going to be at the swing high or swing low of the area where the inversion fair value gap was created. Take profit is going to be fixed at 1 to 2 RR. We will be moving to break even after a low hanging fruit draw on liquidity target has been taken. And we're going to be monitoring the trade for potential opposing SMT. This could be an early indication to either get to break even quickly or collapse the trade in full. So as I say, I've left a link for this down in the description below. You can download it from Google Drive, save a copy for yourself, and hopefully you'll find that useful if indeed you are trying to implement this strategy. You'll also find in the description box below that I've dropped a link to FX Replay with a 15% off code as well. So if you're implementing this strategy, then I highly recommend you need to go do some back testing. I've just signed up to this service like literally a week ago, and I can safely say that this is going to be a game changer for me in 2024. If you're serious about trading, then you know how important backtesting is, especially if you're learning new strategies. Previously, I was using SoftFX on MetaTrader 4, and honestly, it was horrendous. There's some major limitations to that software, which just meant that I didn't carry out anywhere enough backtesting. Well, FX Replay is going to totally change that. For starters, it's using TradingView charts, which means the whole experience, it feels much closer to how I'm trading every single day. And then it also allows you to open up multiple currency pairs at the same time. So you can finally do whole market analysis to obtain a complete bias. And then you can spot things like SMT within your backtesting data. Nothing else I've ever used in the past has allowed me to do that. So all my previous backtesting data was essentially based on only having a partial analysis for the trade. That essentially meant that the data that I had was useless. I mean, honestly, if you're serious about trading, then you need to have FX Replay in your toolbox so you can go back and get your own data on any of the strategies that I'm suggesting you look at. With the discount code that I've got down below, it's around $30 a month and it's worth every single penny. So please do go check out the link below. I mean, if you use it, then I will get a bit of a kickback for recommending you, but either way, it doesn't matter. Just go and check it out. You certainly won't regret it. So with all of that over with, let's jump into the charts now and take a look at this trade. So here we are on EURUSD now. We're going to dive into the charts and see if we can identify a potential bias for the macro. So our macro starts at 2:33. So this is the 1 a.m. candle just prior to 2 a.m. London opening up. So we're going to drop an analysis on here to see whereabouts we are in price action. We should see that we have just swept the previous daily high in Asia, and we've failed to displace above that high. So we're closing back in the range. We did leave a bullish hourly fair value gap. We closed below that fair value gap in full. So with fair value gaps, I'm always monitoring the 50% area. If 50% is holding, then it's an indication that this is potentially a strong fair value gap and price will be rejected from it. Here we closed straight through the fair value gap to show me that this is potentially now an invalid fair value gap, so I'm not going to be taking this into consideration. We do have quite a large wick, so we can treat wicks like fair value gaps. Again, monitoring the 50% area, we can see this 1 a.m. candle did wick up into consequent encroachment of this wick, so 50% of the wick, and then has rejected. She's shown us potentially this is the high of the day now in place. We are not displacing above this high, and we are unable to displace above the previous day's high. Also of note is this new day opening gap. You can see we had a gap from Friday's trading to Monday's trading, which we have currently just tapped. So it's actually a new week opening gap because this is the new week transition. When we drop onto the lower time frame, onto the 15, you will see this highlighted using the session liquidity tracker that we use just to monitor our various session highs and lows. But we are rejecting off a new week opening gap. We've swept also the high from Monday. And again, rejecting below there. So this is showing me bearish bias, to be fair. We're not looking at displacing above these levels coming into London, so I'm expecting a potential pullback into the range. So areas that could be a draw on liquidity, or we've now swept external liquidity. So we've taken yesterday's high, we've taken Monday's high, pull back in the range. So swing highs and swing lows, they are external liquidity. We could be drawing for internal liquidity. Have this fair value gap here on the hourly time frame. This would be classed as internal liquidity. So we will move from external to internal and then from internal back to external. So if we are going to continue bullish momentum, we may need to come back, find some extra orders here, get a bit of momentum going and then drive higher. So this area would be a key point of interest. We could go even further. Obviously we do have yesterday's low. Going on the range theory, we have failed to displace above yesterday's high range. So we may come down to attack yesterday's low. So we have a nice swing low New York AM session and then yesterday's previous low. And ultimately, if we are going to be continuing the bearish move that we've had on the higher time frame, we've created relative equal lows here at the low of the week. So we put the weekly low in on Tuesday, but we only just swept the low. So we've got basically relative equal lows here. So we could even drop right the way down to this level. That would be a rather extreme move. So for our potential areas of reversal, we've already swept the liquidity. We are already in the new week opening gap as well. So coming into the macro, I'm just looking for a bearish move because I am in a premium array as far as I'm concerned, looking for shorts above previous day's high. And so this makes sense that I would be looking for a short trade. And because we're using SMT in our trading pattern, we do need to monitor what's happening on the Dixie. So this is the hourly chart on the Dixie now. And again, we are looking to see if we can get confirmation of shorts on the euro, which we've just established coming off this new day, new week opening gap. So we're hoping for shorts down to this fair value gap. Well, do we get confirmation of that with the Dixie? We can see that the Dixie is actually creating bearish SMT with the euro. So the Dixie has failed to take out yesterday's low. So Asia opened, has driven down, has come into this fair value gap. It's respected it, but it hasn't taken the low. So whereas we took the high on the euro, we failed to take the low on the Dixie. So this is hourly SMT. So this makes me believe that we have a bearish SMT, meaning the Dixie will continue higher, the euro will continue lower. We have relative equal highs created between London and the gap time between the New York AM and PM session. So that's quite a significant draw on liquidity. Again, we've rejected off this hourly fair value gap. Looking for higher prices. So again, this does support the thesis that I am expecting the Dixie to be bullish for the macro and the euro to be bearish. So I'm going to be looking for shorts in this macro. So here we are on the 1 minute chart prior to the macro opening. So the macro is this line here, 233 is the London macro number 1. First thing I want to draw your attention to is the fact that price is consolidating prior to the macro opening. This is a good sign that we may get volatility within the macro. If you're seeing consolidation prior to a macro, this is a good indication that price may move aggressively within the macro. If price is already moving aggressively before the macro opens, then the macro can often consolidate. So I like the look of this price action. Where we are at the moment, we are still inside that new week opening gap. So we are in our 1 hour point of interest, our area where we are looking for a short. There's no S&T at the moment, so we've got the euro above us and the Dixie below us. We can see that the euro has taken some liquidity higher. The Dixie is acting exactly as it should be because the Dixie has created a low at this point, so they are acting as expected. So we going into this macro now are going to be looking for SMT with the Dixie and an engulfing candle. We're putting some highs here. We're just sweeping liquidity, so we do need to see a liquidity sweep as the macro opens. So we're putting some relative equal highs. We've swept up into these fair value gaps. You can see that we are respecting the 50% of this bearish fair value gap. So what I'm monitoring is I'm monitoring the highs and the lows for SMT. So we do have an extreme high up here, and we do have an extreme low here on the Dixie. Putting a new swing high here on the Euro, which is the current macro high, and we've put in a low, swing low on the Dixie. So this is how I'm identifying SMT. I'm constantly looking at the swing highs and swing lows, how price reacts when it gets to those. So again, as I'm looking for shorts in this area, I'm monitoring the lows on the Dixie and I'm monitoring the highs on the Euro. And so I'm monitoring the swing high and swing low. And we haven't taken either at the moment. So I'm monitoring this high. We've taken the low here on the Dixie. So it's only very small. This is why SMT can be difficult to spot. We have taken that low on the Dixie. We are putting in lower highs on the Euro. This is showing weakness in the Euro here. If the Dixie is putting in a lower low, we should expect the Euro to be putting in a high here. It's failing to take the previous candle high or indeed that swing high that the Dixie has just taken. We can see that we do have two inversion fair value gaps. One has just been closed over but then rejected. This I wouldn't class as an engulfing candle, and we didn't have SMT here. We do have a larger bearish fair value, bullish fair value gap here. What's going on with this? So we're looking for, we've got our SMT, we're looking for an engulfing candle now closing over one of these fair value gaps. So there is your SMT with an engulfing candle. So this candle here, much larger than the candles around it. This is also just as additional confluence. We're already in a bearish price move. So you can see that the bias is to the downside. We've had a break of structure prior to the macro opening. We'll come back, we're retesting this order block. So we have an order block. The order block is formed by these consecutive up-closed candles. As we have closed below these up-closed candles, this is the new trendy phrase, a change in the state of delivery, what people are throwing around now. Essentially, the order block has been confirmed because we are closing below these candles. So we've had a break of structure, closure below. This is creating an order block. We've come back, we are testing 50% consequent encroachment of the order block. Overlapping the order block, we do have this bearish fair value gap, which again has held price down. 50% of the fair value gap has held nicely. We have SMT, we have an engulfing candle in line with current break of structure. So the entry is on the close of this candle. It is definitely closed below the fair value gap. So we can see that there is distance between the bottom of the fair value gap and the low of the candle. Stop loss goes above the swing high, created that confirmed the inversion fair value gap. So my stop is above here. It's only a 2.5 pip stop loss. So again, really important that you've got a broker with super tight spreads. Operating in this kind of precision, if you've got a broker with 1.5, 1.6 pip spreads, it's just not going to work. Low hanging fruit. We have a swing low here, very close to current price action. And then obviously more realistic swing low to go break even would be down here. This is where a little bit of discretion is needed. You could go break even at this point if you wanted to. I think that this would be a little bit keen. I would be more interested in going break even here. We can also look at where Dixie has levels. So we want to see Dixie surpassing these levels as the euro is. Ultimately the target, I'm going to close out in full at 2R. However, I will say you do have nice targets below with the Asia low. This is a perfect Judas swing. We've swept the Asia high and then we are coming back. We're on a Thursday, which is where we're coming to the close of the week, expecting probably a pullback into the weekly range. So you could have much lower targets for the day. If you wanted to, I will just be closing this out at 2R because that is my current trading plan. So in the trade, we do get a pullback into the inversion fair value gap. So there is a retest of the inversion fair value gap. I'm already in this. You could wait for this confirmation. You can see 50% of the inversion is held. And then we get a closure through. And then price begins displacing lower. This is a point where you could go break even having taken this level of liquidity. We have taken it on the Dixie as well. There's the other high on the Dixie. Price displaces straight through on the next candle. So if you'd gone break even here, it would have made no difference because we literally displace straight to that next level. This is what macro trades should be like. If you're on the right side of it, this is what I expect macro trades to do. I expect price to drive aggressively to opposing levels of liquidity. And so the confluences that we have are in obviously that new week opening gap, having swept previous day's high, nice consolidation prior to the macro opening. As soon as the macro opens, we get this big injection of volume, SMT, engulfing candle. We are now break even. I don't expect this to pull back at all. Price literally goes straight to target. So that's our 2R trade confirmed. No stress. Exactly how we hope macro trades will play out. You could hold this, as I mentioned, for much lower prices. Specifically, the Asia low looks very nice because we've got relative equal lows and it's above the 15-minute fair value gap. Was it 15 or was it an hourly fair value gap? It's above this fair value gap that we had highlighted. You can see price does aggressively drive down. Come back, testing order blocks again. Take note of how 50% of the fair value gaps are respected. End of the macro. See, we're getting a pullback now towards our entry. It doesn't actually come back to break even. So if you were holding runners with a bit of break even there, so take partials at 2R and then holding a runner, which is what I'm considering doing after the macro price does drop, never actually gets back to the entry. This is an example of why you don't want to trail stops so aggressively. If you'd have trailed your stop up here, you could potentially miss out on the bigger move. There's the displacement through the Asia lows, bagging you just over 3.6R into that fair value gap. Again, another theory that I have is that macros are drawn to other macros. So we do have New York PM session macros here that have been untapped. We can see the price has aggressively dropped into the New York PM session macro. Just another observation. You can see it's finding support at the macro. Swept the macro low, so really aggressive drop. And then we are coming up to the next macro now. That's macro number one. So there is a potential. I mean, if you were targeting the opposing macro, there's a potential 5R on the table here. Really zero stress trade. So there we go. That was the trade from this morning's first macro in the London session. Please do make use of the trading plan that I've left linked down in the description below. And don't forget to check out FX Replay. Get in there and backtest this strategy if you're interested, or any of the other strategies that I've shared on my channel. Really is going to be a game changer for everybody in 2024, I think. If you did enjoy the video, please leave it a thumbs up. If you've got any questions or feedback, leave them down in the comment section below. And if you are enjoying the content and want to see more videos like this, then please do consider subscribing. Just past 3,000 subscribers, so I'm really, really chuffed at the support that I've been receiving for the channel, and I hope you guys will join as well. Thanks for watching, and I'll see you again in the next video.